I want the thumbnail. Yeah, to be fair, I didn't choose that. That was my designer. I just said, look at the video and pluck out what you want, and he went for that. So it wasn't me. That's what you're thinking. But you do look very stoned. Yeah. Yeah. Um, okay, cool. So, yeah, let me just get over to the editor. One sec, so I can see the screen. Cool. Okay, so do we have anyone in the audience? Can you hear and see everything okay? Right. It says on my side, YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience buffering. It also says there are 7 viewers at the moment. So I should see if they can pop in and let us know if they can see and hear okay. Yeah, it's still just got the loading wheel for some reason. I don't know why. Shouldn't be any different. Maybe it's the fact that we have Discord up as well, but can you see the Discord now on the stream? Yeah. I think it will still go ahead. It will just be a bit slower on the sort of receiving end. Yeah. Never easy. Never easy. Yeah. Exactly, man. Such a faff. Yeah, biggest streaming platform in the world, and they can't sort that out. It's a bit of a joke. All right, so we got a couple of people in the chat. Laith, Mary, how you doing, guys? You well? Okay. Just give me one sec. Hey, I got fiber optic, buddy. Yeah. Yeah, in the middle of the sticks as well. Okay, so we'll kick things off by talking about our sponsor. This stream is sponsored by BitUnix. Deposit to enjoy 30% rebate. If you deposit 100 USDT, you get 30 futures bonus, 500, 150. And if you deposit 1,000, you get 300 USDT futures bonus. We've got Trader Matt on the stream. How are you doing, Matt? Yeah. Yeah, nice, nice. All good, man. All good. Have you been trading much? Sure. Okay. How come? And Bert? And Bert? Just threw that one in there. Okay, sure, sure. Yeah, you're just tracking it for the spot side. Sure. Yeah, of course. Of course, of course. Oh, really? That is very strange. I can hear you okay. Can anyone else hear Matt? Okay, please let us know. Matt, we don't hear. There's nothing my side I can do, I don't think, is there? I mean, I can hear you fine. Can you guys hear me okay? We're just running this through Streamlabs, so it should be picking us both up. I mean, I don't know why it would be picking you up now. Yeah, what do you reckon we should do, Matt? Yeah. Just so you guys know, we've tested about 5 platforms this morning to try and make the stream work for you guys. Absolute shit show as always. Yeah, I mean, we're running it through Streamlabs, so we should be able to pick up your voice. But yeah, if people are saying that they can't hear you, then I guess we have to reschedule. Yes. Yes. Yeah. Well, I've got headphones on, so. Yeah. It should. Yeah, for sure. I mean, you're coming through the desktop as well, so. Yeah, it says audio is fine, just not Matt. So, should we put this on pause, Matt, or? Yeah. Okay. Okay. Yeah, let's do that, and we'll get you back on next week. Yeah, we'll try. Yeah. Anyway, rest up, man. Get well, and we'll speak next week. Yeah. All right. Take care, man. Bye bye. Okay, so we're back. So just to go back to the BitUnix sponsorship deal here. This is a bit of a no-brainer for you guys. If you deposit 100 USDT, you get 30 USDT Futures Bonus. 500, 150, 1,300. This is basically free capital to trade with. So yeah, if you haven't, I recommend signing up. The link is in the description. And now that Matt's hopped off, some technical errors. You just have me today. Classic market review, all the good stuff, okay? Just one final check. Can you hear me and see my trading view screen? All right, I'm just putting my face over to the bottom left, as per usual. Just speak this a bit as well. Cool. Okay, guys. Well, good to see you all. Apologies about that with Matt. Yeah, no matter what we try, it seems we can't find a decent streaming collaboration option. But we will try again next week. We'll try again. Okay, so right, let me just pull up BTC and we'll get things going. Okay, so Start things off on the weekly as always. Okay, we'll start things off on the weekly. Let's just clean this up a bit. So, ran through this with my Discord group earlier on in the week, just talking about how the weekly is in a super healthy position, and basically still just seeing the move away from weekly intra-demand here. Okay, so push away here, and the nice thing about what's going on here is we have this reset here. Okay, so going down to the weekly level here, on the RSI coming down to the 50, and this is super healthy for Bitcoin on the higher time frames. Okay, it's exactly what we want to be seeing in this area, and wouldn't be surprised from this region to see a push in price on the higher time frames. Okay, now we lose this level and we're probably coming down to revisit this pocket of origin demand in here, although at current we are still pushing away from this zone. Okay, all right, so down to 3-day, you can see that we have a reclaim of the mid-level here, and again a reset. We dipped just down past the 50 level here, but deviated it, reclaimed above, and still looking pretty strong. Daily in good stead, we're hovering around the 55s on the RSI, in the upper region above the 50 level, and generally speaking, things look good, things look healthy. So 4-hour, not too much to mention here, and the hourly simply chopping around. Okay, so this price action on BTC is just pure consolidation. I expect it to lead to higher prices, as if memory serves correctly, the delta is looking pretty healthy in this area. Okay, so you can see the spike of negative delta, so a pretty large spike of aggregated negative delta here on the hourly. If we scroll back, you can see that it's the largest spike we've had since the 25th of August, so nearly a month, on the hourly time frame, indicative of market selling in this area here occurring into limit bids. And as any avid watchers of my content will know, that means that the larger, more influential market participants are soaking up those sells in this area here, which is nice confluence when we look at the general price action on BTC here. In fact, we tapped into weekly demand, the sort of positioning of the weekly RSI, i.e. being at mid, and then the fact that we're firmly back into this slightly lower time frame range here as well. Okay, all right, so now we're tussling with the EQ, or midpoint of the range. What we really want to see for BTC is to take this level here, reclaim it, and you can see that this 50 level is not just marked on the chart for the sake of it as well. You can see that it does have really nice touch points and interactions. Okay, so it's a good SR level as well as a technical midpoint of the range. Okay, ETH, again, look at it from a top-down sense. The weekly is starting to look and feel very exciting. Okay, starting to look and feel very exciting. The reason being is because a few weeks ago I was saying this was really a cause for concern. Okay, in this area, it's moving up way too fast, it's moving up inefficiently, and price simply doesn't have the time or space to stall, consolidate, reset the oscillators, and move upwards in a healthy fashion. Okay, now this consolidation underneath previous all-time highs here at the 4.9s is exactly what we want to be seeing. And to be honest, even if this continues for another few weeks, would be a good thing by my books. Okay. The weekly has now come down from plus 70s and 74s down to 65s, which is nice. It's a good start. Now, if you go down to the 3-day, you can see a much more significant cool off here, coming down from the 81s to the 58s, and looking much, much healthier here. The fact that we haven't sort of rejected instantly in this area is also a good sign, because we did sweep the all-time highs. Okay, so we did put in this SFP, sort of local sweep here of this level as well. And, you know, the fact that we drifted down here and then pushed up is a good sign for ETH, because it shows that there is still buying interest in this area. Then if you also couple that with the deltas that we've been seeing recently, a very pretty picture indeed. So if we go over to the 4-hour, it's actually a particularly interesting time frame for the ETH delta at the moment because of this 4-hour bar here. Now, if we go back and keep scrolling back within this delta template's look back period, you can see that we haven't had a spike of high volume negative delta on ETH on the 4-hour to this severity or degree since March 24. Right, so very, very long time. And to see this sort of spike soaking occur just underneath all-time high as we consolidate, which is exactly what we wanted to see, and at the same time have some of the most healthy RSI price action that I've seen in a very, very long time in terms of interactions with the mid-level. You can see that here, basically all we did was take out all-time high here. So the sweep of all-time high, then come down, right? And literally just drift down into, let me clean this up a bit for you. So sweep of all-time high here, drift down. As we drift down, we come into this block here, which I'm not going to label as demand because it's not structurally sound enough, but I will call it an MSDZ, market structure defense zone. So this is where the low has to hold to defend market structure. As we do so, we have this glorious price action on the RSI here as we come down to the mid and just hug it, right? We're just hugging that mid as support, push away again. And you can see just how pivotal the midpoint or on the RSI has been for Ethereum on a daily. Come down here, strong interaction, come down here, strong interaction, come down here, hold it for multiple days, over a week or so, and then push off. Okay. So all in all, ETH looking very healthy, putting in the consolidation that we do want to see in this area, and now strictly confined to a 4-hour range. Okay. So as we map out this range, I'll put it from this high here to this low here. Just a note on marking ranges as well, if you're not familiar with how to do them. The technical textbook way of doing it is basically marking out the first swing high and the first swing low, or the first swing low and the first swing high in the reverse order. Normally what I do is that, but then also as things develop further, I tend to sort of tweak the range to whatever best fits the chart and just basically do it by eye. And I find that that's always the best way to do it. Okay, so don't be too rigid with your range marking. This one I haven't adjusted from the first swing high and the first swing low. But if you do need to adjust it as things go, then it should sort of be an evolving technical pattern that you use, right? As you can see here, just taking it from that first high and low has been quite nice in terms of the interactions, and you can see here how we're just holding that mid, using it as support here, and hopefully we see a push off and either move into price discovery or remain range bound in this area. As I said earlier on in the stream, I really wouldn't mind that at all for Ethereum. I don't know how long you guys have been in the space for, but I've been around for a long time, 8 years now, and this last year or two has been some of the most unpredictable. Well, it has been the most unpredictable market conditions that I've experienced in crypto. And yeah, I'm sure a lot of you have been wrecked on the spot side of things. If you haven't, then good going and well played, but it's been very, very difficult to navigate the altcoin side of things. It's been a trader's market. Things have been very uncertain. People have been waiting for the bull market for what feels like eternity. So I know everyone's eager to see ETH rip and pull up the altcoins, etc., but just have a bit more patience about yourself, because at the moment we're confined to a 4-hour range, and if we can keep this going for some time, all it's going to do is give us more likelihood that we travel to the upside as that sort of weekly RSI comes down, cools off, and resets the momentum for further upside. So I know everyone's eager to see the altcoin rally, see that bull market come into effect, but I'm more of the sort of band camp whereby I'm very, very happy to see ETH consolidate. I'm very, very happy to see ETH go sideways. It's been a very uncertain market so far, and nice to see it back at all-time highs. Surprising to see it back at all-time highs. I'm gonna put my hands in the air and say that I didn't expect that from ETH. But now that we are here and we've done so fast and with such a sharp move, consolidation in this area is a very welcome sight. Okay. We can go through some of the other markets here, or charts rather, because we haven't done any of these, and I haven't looked at these before the stream, so you'll have to bear with me as I sort of see them with fresh eyes. Interesting. This I honestly didn't mean to pull this chart up, but I remember putting a tweet out. When was it? It must have been, yeah, in April. Okay, so putting a tweet out in April, which said that the weekly RSI on ETH BTC, this historically marked the last low, when the RSI dipped down to 24, and we came down even lower to the 23s here on the weekly. And you can see that we have had that push off as ETH has had its incline of recent months. So yeah, pretty interesting to see that. Let's see if we can hopefully turn it into something like this, if that sort of uprise is sustained on ETH BTC. Okay, wow, totals in a very, very interesting spot as well. Okay, so incredibly interesting spot. I did not know that we were here. Must have had this weekly SR level marked out from a long time ago, but you can see the interactions very clean, and you can see that we sort of almost have consolidation in this region as well. So for those of you that don't know, I'm looking at total 2, which is the total crypto market cap excluding BTC. We go to total 3, slightly more interesting chart. It's excluding BTC and ETH. Okay, so yeah, both look very, very interesting. Okay, so you can see that total 2 is pushing ever so slightly, just because it includes ETH in that basket, obviously, which is pulling it up. Sorry, vice versa. But yeah, both look super, super healthy in this area, to be honest. Both looking at potential breakouts, and yeah, I mean, very, very interesting spots indeed. It's nice to see this sort of semi-consolidation in here. If we go down to the 3-day, yeah, even more so. RSI in very good stead here at the 59s, daily at the 57s. All looks very healthy. Okay, all looks very, very healthy on the higher time frames. And let's take a look at dominance. What are we looking at here? Okay, so again, I haven't looked at any of these charts for weeks or months even since I last ran through it with you guys, so probably more like months. But I think last time we were on stream, we noted this potential weekly divergence here in this area, and there's been so many people trying to call the top on dominance for so long, years really. But this was the first real higher time frame signal that caught my eye because we haven't really had a proper weekly double divergence across both the RSI and the Awesome Oscillator, where the oscillators are making lower highs whilst the price makes higher highs. And we got one in this area. It was a decent divergence, right? You can see that we have that agreement between the Awesome Oscillator and the RSI. Both peaks just about overextended, which is good. Midpoint of the arc doesn't come down too close to the 50 level to reset it. And so far we can see it play out off the back of this divergence. Okay, so for those that don't use divergences in your trading, please do so because they are some of the most powerful signals, if not the most powerful signals that I operate with in my system, especially when you're looking at the higher time frames. And the fact that we can just pull up the dominance chart, which is a very arbitrary chart, and still see the playouts of divergences on the pattern of price here is quite remarkable. Okay, but yeah, please look into divergence trading. If you don't already have that in your system, please try and look into integrating it. I've got multiple videos on the RSI and divergences, so feel free to check them out as well. Sol we can take a look at as well. Why not? Just give this a bit of a clean up. So going back to the monthly, months ago, again, when we were here, I spoke about how this was easily the most interesting chart in crypto at the time, based off the monthly, right? So I was very, very vocal about this positioning here just because we had a monthly SFP, right? Monthly sweep in here, pro trend, higher time frame, and I'm sure you guys are seeing what I'm seeing here on the RSI as well. You know how much of a fan I am of 50 resets, and we have an exact reset on the, well, you know how much of a fan I am of 50 resets, and you also know how much of a fan I am of the higher time frames. The higher the time frame, the higher the validity. And yeah, you can see extremely interesting price action and agreement between the oscillators and price here. Tons of confluence, very simple stuff. Okay, we're not overcomplicating things. You can see the analysis I've done so far is just pro trend, sweep, higher time frame, 50 reset, and yeah, you can see the play out has basically just been off to the races since then. Okay, so yeah, on the higher time frame, Sol is looking very tasty. Okay, we're starting to see the push away from that midpoint, and again, you know, these just using simple stuff like the midpoint RSI and a higher time frame monthly chart, right, can make for incredible either position trading opportunities or simply spot and investing. Okay, you know, I feel like there's some shame around the notion of using higher time frames, whereby people think then, you know, they're not doing well enough relative to others that are, you know, scalpers, intraday traders, for instance. But there's absolutely no shame in trading the higher time frames at all. And once these cogs get set in motion, i.e. monthly sweep plus 50 reset, it's a great thing to ride. Okay, and it's a great experience to do so. When you start moving into the areas of multi-month position riding, it's very stress-free for one. But also it's more reliable, right? Because you're trading the higher time frames, you're moving and trading off the back of, or investing off the back of much more reliable signals. And some people look at this and go, okay, well, it may be too simple. It's too easy. For instance, this level with the mid, I spoke about this in the last stream, that the midpoint RSI almost always coincides with the stochastic. So we pull this, you can see down to the mid, right, as the stock goes down to the overextended region and just curls over here as well. So even if you weren't using the RSI, right, and you were just using the stock, you're a stock trader, as in stochastics, you may be looking at this going, this is just too easy, monthly sweep plus stock curling down at the lows. But sometimes those higher time frame signals are just very simple, very easy, and all you have to do is just back your understanding that the higher time frames do deliver the strongest signals, and then just simply apply a lot more capital. It's basically the way to play the higher time frames, the way to position trade, and the way to profit equally as successfully as trading the lower time frames, by just clicking a couple of buttons every few months, essentially, if you're trading markets like Sol on the higher time frames here. Now, that sounds pretty good to me. I don't know about you. But again, it's something that you'll likely get to your own goal slower, granted, because you have to still get that first-hand trading experience through triggers that are only coming every few months or so. Okay, so you're not taking a trade every day, you're taking a trade every few weeks or every few months. But once you start racking up those win rates and start turning high profit factors in terms of your statistical data gathering, then you can start sizing up with confidence. And you have to remember here, guys, like, just getting a high win rate isn't really what you're looking for in trading. You're looking at profit factors, but you're also looking to have a great deal of confidence in your stats to then start sizing up, right? So just performing well in the markets to a sort of average degree, I thought was like, okay, cool, like I'm doing well here, and things going well on the trading side of things. But that was really the first 5% of my journey, and then what I'm into now for the last couple of years has been just trying to scale my trading, trying to size into my positions, and to size into my positions with more confidence, higher probabilistic odds, etc. I am naturally gravitating towards position trading, towards the higher time frames. Looking at simple signals like this, for instance, is a perfect example on Solana. And you can also then use the lower time frames to hone in on more specific and dialed in entries, right? That is also a tactic that you can use. But just when doing so, just make sure not to place your stops too irresponsibly tight, and just make sure that once you have your position set up, flick back to the higher time frame chart and just see what your position looks like on that chart as well. Okay, because often what you'll do is go, okay, cool, weekly is reset, I'm going to come down and trade, let's say there's a divergence in this area, and using that higher time frame edge, I'm going to snipe down to the 4 hour and place a trade like this. That looks good to me. A good bit of buffer room here, and run it up as far as we can. Okay, but that's where my stop loss will be placed. And then you go back to the weekly and you go, Okay, cool. Well, I really don't have much of a stop gap here at all. This looks a bit more sensible here. Okay. So just a note in terms of your positioning, you can use the lower time frames if there is a suitable trigger on one of those time frames. That's fine, but just make sure you're letting that trade breathe, giving it the respect it deserves on the higher time frames, because the last thing you want is to be stopped out, and then the market runs without you, and everything still looks all gravy on the higher time frames. Okay, so we're going to take a look at the altcoins now, run through some of the markets. rebate just chopping around in this area, nothing particularly actionable here. Arrow, again, taking its sweet time. I'm still in position here on Arrow. I spoke about my long position on Arrow in the last stream. And I'm still long XRP as well. Okay. XRP still looking decent, though coming down and correcting ever so slightly in this area here. Let's take a look at the 4. Yeah, hopefully we do something like this. Take out these lows perhaps, as we have multiple stacked lows in this area. I'd like to see it move like this. Okay, ideally. More so than even moving away directly from this point, to be honest. With these multiple stacked lows, it'd be nicer to see them wiped first before we move higher. Okay. BNB, still a raging market, right? Still a raging market on BNB. Got this 4-hour pocket of intra-demand here, which I have an alert set at. So it would be quite nice, like a 4/2 hour pocket of intra-demand. Again, it's not the cleanest of demand zones. So for anyone who's watched my supply and demand video in the trading course I've got here on YouTube, you'll note how I mark my SD zones. I really want to see a bit more of a block or cluster. Even if we pull this down to sort of here and here, it's still not too blocky because we have these gaps either side of price here. But then if we take it from wick to wick, even more gappy. Okay, but the reason I'm using this zone and the reason that I've marked it from wick to wick is because of the utter strength of this market. Okay, BNB has been the strongest market of late. I didn't get in on this trade here and spoke about why I cocked that up basically in the last stream. And yeah, we'll try not to make the same mistake again. But it's the age-old conversation of dropping your stringency, dropping your criteria based on the strength of the trend. And in this case, it is very, very strong indeed. Okay, so regardless of this not being the most technically appetizing demand zone, would like to see more blocky price action, more back and forth cluster type price action. Still happy to use it because I believe, based on the strength of the trend, that we need very little in the way of confluence, very little in the way of criteria to make this market move. Okay, essentially what I want to be doing is just getting on board the train here on BNB. Okay, and this seems like a probable zone to do so. Okay, so in terms of execution, I'm looking for speed, as always. Ideally, I'm looking for a divergence, right? So something like this. Lower lows on price, higher lows on the oscillators. But if I don't get speed, still happy to sort of just take a divergence as well. Okay, we are hovering above this demand zone, but we're actually a fair bit away. Okay, so the demand zone isn't directly under the lows of price like it normally is when we get this sort of impulse range and then sweep down continuation pattern. So we do have a bit of a gap here that could get filled, and that sort of gap and distance may give us enough room for a divergence to form, potentially on the hourly time frame or so. Okay. Bonk probably deserves to be removed from this watch list. This is a weekly strength watch list, so it's the strongest markets on the weekly time frame. I probably added it in this region here, but I think it's time to get rid of this one. B, I have alerts set down here at the lows. Okay, so there is one very, very obvious low and level to mark out here, which is the 44s. And yeah, looking for a nice move down here and see if we can get any divergences in this area as well. Okay, we may have the start of a formation of a 4-hour divergence here, perhaps. So we could do something like this. The first leg is just about okay, and this high is just about okay, even though we're coming into the sort of 45 to 55 area, which for me is normally a reset. This has historically been a strong market, so again, happy to sort of bend the rules ever so slightly. If we get a nice, clean, well-structured double divergence across the oscillator and the RSI, okay? So when looking at a nice, clean, well-structured divergence, what I mean by that is we have a good arced formation on the RSI. And again, if you want to see this in a bit more visual detail, please check my video a few videos back, the RSI Masterclass. So I'll be looking for something like this on B. Would be a very nice trigger indeed. Crow, again, just still simmering after a Trump-related pump here. So let's see what the play out is, whether we continue to the upside or not. Deep. Yeah, nothing too actionable, really. Okay, I'll set a new alert down here. See if this final independent high low gets taken out. If not, then we may still move to the upside and break out this, giving us an upside trigger. If we start closing underneath this low, then I'm definitely removing this from the watch list because it's had its chance to prove its strength, and it wouldn't have done so. ALTCOINS still confined to a daily range here. Okay, so we may see a retest of the lows in this area. Quite common, to be honest, when we see these sort of higher time frame sweeps of lows on ranges. As I've spoken about a lot recently, the market tends to make you sweat, and these sort of retests of swept levels tend to occur. Okay, so come down, test the liquidity in this area, then move away. A lot of people panic close positions as stuff starts coming down. Again, the market, usually rewards you when you start having that patience and that sort of compos mentis ability to ride out any sort of lingering price action, consolidations in certain areas without moving away from your initial entry. But unfortunately, most people suffer from cortisol decay and just get too stressed out and close their positions prematurely. H-bar is still looking nice, right? So still working off this deviation of these triple stack lows here. Again, could see something like this. If not, we just move directly upwards from this area because we are still currently hugging the top side of the 50 level here on the daily. Hype. Not a big fan of seeing this double daily divergence here on hype, considering it's pretty much my only spot bag. I am long spot from down here in the 19s. Once we reclaim this level here, so this SR level here, and push away long here from the 19s. Stalked hype like a madman earlier on in the year. I believe it was the beginning of the year, if not the end of last year. Oh no, it would have been, yeah, no, it was in this area here, so sort of May time, and managed to pull a couple of big haymaker trades on hype earlier on in the year. If you want to see them in full detail, check out my 2025 trade highlights video. And you can see that in full clarity, my thought process, execution style, and management of the positions. But yeah, as I say, also long spot from the 19s, and it's just been a very, very technically sound, very strong market here. I'm hoping that this is more of a trap than anything, right? We have this sort of counter trend, double divergence on the daily, but we do just start to see the grind up, and any sort of people that are trying to fade this market get caught offside, but we're yet to see. And I am, of course, biased. Full disclaimer. Same sort of price action on IP. Okay. So this is a stronger divergence signal here, as we are more overextended, so it's a bit cleaner on the div side. But again, very strong market. Okay, as most of you know, I don't ever really try to fade strength. Okay, it's something that I stopped doing a good while ago. Okay, I'm not here to farm clout. I'm not here to show the market who's boss. I'm not here to play ego games. I've learned that basically, if you can just like put in place one firm rule for yourself, which is that if you're trying to make a decision in your trading, ask yourself whether you're acting in a sort of egoic manner, or if you're moving in a manner which is the antithesis of ego, and moving away from that sort of egotistical state. The more you can move away from trading and acting with your ego, the better. Okay, so on that basis, I rarely try to fade the markets, especially when they're heavily trending. Instead, I just try to simply align with them. Okay, so me years ago, I would have seen signals like this on hype and IP, and definitely tried to play the short. Probably done so with a fairly tight stop, and almost always would have just got wrecked as the markets did something. Let's take hype as an example. Markets did something like this. Put in what's known as the fuck you leg of the divergence. Okay. And kept diverging on the RSI, so it's still a valid divergence here. Something like this. And yeah, completely wrecked me, completely stopped me out of position. And these were things that, even whilst I tried to do my journal reviews and realized that one of my demons was tight stops, even using fairly wide stops, just didn't have much luck or much success with it, to be honest. And I know you see people on Twitter that are, posting historically whenever we have fast moving markets or particularly strong markets, especially to the upside. What you'll see on Twitter is a bit of a shame, to be honest, and it's one of the reasons why I'm always preaching for people to get off of social media. You'll see that one person that's nailed that fade, right? Nailed that short, done so with a pretty tight stop, and you'll see the P&L card and everything, and you'll think to yourself, okay, cool, well, it's possible. A lot of people are doing it. What you're not seeing behind the scenes is the other 1,000 darts that they're throwing at the dartboard, and none of them are sticking, okay? And yeah, you just need to be very aware of that when you soak up information on Twitter. I think it was probably one of my biggest letdowns in my nascent years of trading, was just leaning too much into Twitter and not realizing the psychological impact that Twitter had on my trading and my performance. And this is a great example, right? Just seeing people that are trying to fade super strong markets, doing so successfully, and essentially operating on very simple triggers, right? And trying to do it myself, realizing that I had no edge there, losing a shit ton of money, and realizing that trying to fade a strong trend is fool's play. And yeah, I rarely trade counter trend these days unless it's a very, very, very heavily confluenced signal that I'm getting, and it's just simply irresistible. What's up, Zadran? How you doing, man? Good to have you here. Link still moving away from this pocket of origin demand here. Still looking relatively healthy, although just very much consolidating in this region, similar to many alts in this watch list. Alt, the RSI 50 level holding on for dear life here. But yeah, we'll see. Even if we continue chopping around and lose it ever so slightly as we did here, it's no real big deal. As long as we can hold this level and hold that pocket of origin demand on the floor, then we're good for higher prices. MNT, where are we here? 12 hour. Yeah, okay. So again, prime example of the markets I almost certainly would have looked into trying to fade here. MNT weekly breakout, right? So super strong weekly breakout here, super fast move, and like just look at the higher time frames here, right? Like I have no interest or business trying to fade something which is just broken out on the weekly of a 546 day range, okay, with great touch points, good consolidation prior to the break, and yes, a strong, potentially inefficient breakout candle, but all things considered, I'm not looking to fade this market at all. Whereas, as I just said, the trader years ago wouldn't have been thinking in this regard and would have probably just been looking at this isolated time frame, which is another huge flaw, right? So instead of looking at the holistic picture on the higher time frames, using that rationale of, okay, we've just broken out of a 550-day range on the weekly, looking very technically sound on the higher time frames. We also know that the higher time frames are more valid time frames, right? So we're working with higher validity, higher probability. But just looking at the 12-hour here, we have a very severe RSI divergence. We have that double agreement across the oscillator as well. We've got some nasty wiki price action here as well, right? Which also probably would have lured me into the trade without really being cognizant of doing so. Okay, and oftentimes what happens when you're trying to fade strong markets like this is either we have the scenario that I played out before, where we just go for the fuck you leg of the divergence, stop anyone out in this area, and then keep cracking on. Or what also tends to happen is we just simply just do this. Okay, so we just remain range bound in this area, build up some steam, and then go for it again. Okay, so this is also a very likely play here, okay, for price. We just remain range bound, we cool off, we don't give anyone the retest down here at the weekly level where I've got my alert set, fingers crossed. But we just remain range bound. What happens is the RSI comes down, cools off. I mean, to be honest, we're already pretty much cooled off, right? So we're pretty much down to the mid 50s here. So if we were to do anything like this, then we would have cooled off on more significant time frames as well. Okay, so the daily would have come down to that 50 level. 3-day would be looking a lot more healthy as well, and price just goes on to push. And if you haven't tightened up your stop to break even, then you still get stopped out when you think what you're doing is honoring the position, letting the position breathe. All that's happening whilst you're suffering, thinking you're doing the right thing, is the oscillators on the higher time frames are cooling off, ready for another leg up. Okay, so again, just a word of caution to you guys when you're thinking about fading markets that look like they've got valid triggers to do so. Just look at the trade from the other side of the coin. And if you're not already doing so, firstly, the video after next is going to be hopefully one of the best I've done so far, and it's going to map out for you how to create a trading system from the ground up, okay, in a very easy to understand manner. But within sort of creating that trading system, it's critical and fundamental to have a pre-trade process. Okay, so before you enter a trade, you need to have some sort of processing framework in place. For me, I use Typeform. I go into in the video how to set up a pre-trade process in Typeform to keep you out of shit losing positions, which are emotionally driven entries, and have you focus on solely staying in the winners based on historical data. So you're operating in a very mechanical, systematic sense. And what happens with these pre-trade checklists is basically it's like the bumpers in bowling that just save you. Okay, when you're turning up to the bowling aisle and you're a little bit tired and you're not on good form, those bumpers are going to save you. It's the same thing with trading. You need that pre-trade checklist to keep you in your lane, basically, and operate in the areas that you're meant to be operating in the style you're operating in. Anyway, the reason I'm speaking about all of this stuff is because within that pre-trade checklist, one of my prerequisites before I enter a position is pick apart the trade as much as possible, right? So just pick, play devil's advocate and, just completely put yourself in the other shoe and pick apart your trade as much as physically possible. Scan across the time frames, all of the time frames when you're doing so. Okay, so that sort of process is what really led me away from being lured in by seductive markets such as the 12-hour here on MNT, and going over to the weekly and going, okay, actually this is actually a significant breakout here that's occurring on the weekly. The weekly trumps 12-hour, all of these I write down in bullet point style. Weekly trumps 12-hour, strong weekly breakout, 3 touch points, consolidation under the weekly. Should I be in this position? Probably not. Okay, so it's just, and this is where you sort of counter trade your own psychology. If most of you are still unprofitable and being let down by your psychological flaws, your emotional condition and your emotional traits, for instance, a classic one is just giving way to the dopamine that floods your brain when you look at this 12-hour div and going, okay, cool, well, I'm catching the top here. You start convincing yourself that you're catching the top. Okay, and we have this really, really nasty wick up here on 12-hour. So the damage has been done to the upside, right? We're probably not going to run this at all because we've put in the high. This looks like a textbook high here. So I'm just going to put my stop here. And, once we start locking down past this breakout level here, then it's, game over for MNT. So let's put it down here. We're probably looking at something like this. It's a 6R trade, looking tasty. I was going to put $500 on this trade, but in fact, let's put $1,000 down as risk, or I was going to put down 200 instead. Let's max that out and go to $1,000. And you start sort of weaving together this story in your mind about what will happen to the trade. And yeah, newsflash for you guys, the market doesn't give a fuck about what you're thinking or what you think is going to happen to your position. Essentially all that's happening in that time of operation is your brain's being flooded with dopamine, which is essentially the excitement hormone. And you're letting that excitement and future prospect of making money, making gains, making good P&L just distort your sense of reality, essentially. And yeah, like I say, pre-trade checklist is critical. Okay, and having that sort of process where you have to pick apart the counter side of your trades as best possible. And just a little tip for you guys when you're doing this as well: don't look at it as if it's your trade. Okay, look at it as if it's one of your peers' trades, and you're trying to be as hypercritical as possible. right? And yeah, you'll often find you see, especially when trying to trade strong trends, you'll see a lot of counter trend arguments, counter trade arguments rather, and oftentimes that sort of process is really what saves you from losing money on that trade. Okay. And all these little tips and tricks are essentially what you need to do to grow your account. Okay. So I had a in real life friend ask me the other day, are you just looking for that big win, right? Is that what makes your year? And I said to him, no, trading is about compounding thousands of good decisions. Okay. And those decisions, can be either winning decisions that bring you profit, or simply staving off and abstaining from losing positions. Pendle still looks decent here, right? Still a pretty strong market here on the weekly. By weekly level in here. So ideally we want another touch point. To be honest, if we see very healthy consolidation in this area, I'm happy to treat this as the 1, 2, and 3, right? So for all breakouts, whether diagonal breakouts or horizontal breakouts, we want at least 3 sustained touch points, but also in my system, it does say that they should be nicely spaced out. So this is a bit of rule breaking here, but based on the strength of the market, okay, if this is going to pull another MNT and give us a decent entry in doing so, then it's kind of not really a market that I want to miss the ride on. Okay, and even just looking at the weekly here, very, very strong. Okay, so down to the 53s, now starting to push away. Yeah, it's a good looking market indeed. And to be honest, I think I'm going to start stalking this market on these slightly lower time frames a bit more to see if I can get a potential premature entry, only with a valid trigger, of course, prior to the break. Because the issue with MNT, I didn't take a position on MNT because the breakout candle was just too wide. Okay. For me, I'm not really looking to take a trade. I have to place my stop responsibly and buy my book responsibly, is always on the side of consolidation prior to the break. So I'm not really in the business of allocating my open risk, which I sort of deal with very carefully and value very highly on something with a 35% stop. Instead, I'd rather operate on those markets like the XRP trade in here and look for the trades that sort of 7-hour trades on strong markets, but I'm taking a 4-hour trigger as opposed to a weekly trigger. It's a bit more appetizing for me to allocate my open risk to markets like this. Pengu's super strong market still, right? Still super strong. Couldn't even come down and take out this low here at 27. Okay, so really it's just it's a nice range bound market, really. So again, in terms of using what makes best sense, I'd probably take this low here as we have interactions and touch points here. Okay, so this is what the range would look like. You can see I'm not taking that final wick here. I'm taking this one before it, just because we have these nice interactions, touch points, as we front ran that low there. So yeah, this is probably the best way to look at Pengu, and we can still keep an alert down here at this low in case we get some sort of nuke or scorch down to take out everything. Essentially, these are stack lows now down here, and would still love the trigger. But also I won't discredit the possibility of just reclaiming the mid, holding above and pushing towards the range highs either. So we've taken a look at. SPX. Yeah, lose the 50 level here, and I'm taking it out of this watch list. Right, just lose this, and I'm done with this market because it's been fucking around for too long. Right, we had this this daily break in here, push away, things were looking good, and it started to close back under and do fuck all for a long time. So yeah, I'll be. Remember, guys, if you operate on a watch list like this, weekly strength, weekly weakness in bear markets, etc., you can always put a market back in, right? But if they don't belong really to be in there anymore, based on relative strength, then it's time to get rid of them. Sui, again, really nice on the weekly, just super healthy price action here. If you look at the line chart, okay, basically just forming this giant symmetrical triangle here. Very nice, very nice on the weekly. Very nice on the daily as well. And you can see on 4 how we locked in this deviation of these double stack lows and are now pushing away. Okay. Apologies, I'm going to have to call this stream here. Just realized that